What is up, it's Dusty here and welcome back to another crypto video. I hope we are doing all good. I did not check a lot of different things because, well, we're a little bit late to the party. There's actually a couple of very important events happening over the next couple of hours. One of those very important events is happening in about 3 minutes, which is why I'm giving you guys such a rushed little update right here, as we have the ECB interest rate decision. We can see here are a little different numbers: previous number, consensus, and forecast, and of course the actual coming up in a second, plus another sort of expectation here on the right. And if we check right now, it's going to happen in about 2 minutes from now. We expect the interest rate in Europe, which is the ECB's decision, to shoot up and the markets to react potentially quite negative to it, but we'll have to see exactly how this develops over the next couple of minutes. Just wanted to quickly stream this for the people that are close by. Honestly, I would have done this giveaway a little bit earlier, but I've been stream a little bit earlier, but I've been so busy with this giveaway with my entire team. Guys, the giveaway is finally ended, so we have to pick the winners, but it's going to be a little bit of an endeavor to contact everybody and get that all done. Quickly tweeting it out as well that we are streaming. Let's go. There we go. But yeah, so nobody can enter anymore. It's actually officially closed right now. Oh, I'm happy. It's going to be a cool time, guys. It's going to be a cool time. Fullerine says, about to go to bed at last I'm here. Yeah, I just want to see quickly how Bitcoin's going to respond to this. Obviously, there's a couple of different decisions and we can't see them all, but let's quickly go ahead and go towards, I guess, a Bitcoin for ourselves and see exactly what's happening, as the decision is going to be made in, I believe, 1 minute. But I'm also not so sure if it's going to be wait a minute. Okay, let's quickly put things into perspective. This is a 1 minute chart here for Bitcoin. I believe we're going to get this decision in about 1 minute from now. If I'm mistaken, please let me know down below, but it's this right here, the ECB interest rate decision at 2:15. We have no actual rate just quite yet. We have our previous consensus TE forecast. Okay. So, we have to wait. 12:15 GMT. Yeah, so I was afraid there was going to be only this speech, right, where the rate will be discussed later on. But I'm believing as well that the decision is going to be, or how exactly does that work, guys? With the Fed, it's a little bit easier. I don't really watch the ECB's decision normally. However, today's an important day because we have so today's an important day because we have the Fed Powell speech later, which is the one that I normally focus on. With the ECB, okay, it's actually been decided already. 1.25, huh? 1.25. Let's see how Bitcoin reacted to this. Ooh, instant dump. It's actually recovering a little bit again. Ooh, okay. So people react to this news rather negatively on the second, and it's recovering rather quickly again. Wow, it's actually pumping. Interesting. I guess maybe because it's right on target. Okay. So the initial dump, not so sure where that came from then, because the interest rate number was not as high as people expected. Then again, again, I'm not telling you guys to go trade any of this stuff. It's too risky. It's too volatile. Very often you can't really predict it, right? In this case, we got the number, and still, I'm thinking personally it's an extremely high number. You're going into a recession very hard. It's not something you'd want. Then again, it is according to forecast, which you might say as, okay, if you're forecast or below, usually that's a positive impulse, and in this case, they were on that number. Then again, I expected it to actually be even higher than it was now. Let's quickly refresh this to see. It's not updated right here just quite yet. It is still a ridiculously high number. Don't get it wrong, all right? Don't get it twisted. 1.25%. This I don't really care about. Deposit facility rate, margin lending rate. I guess that can be kind of interesting because is this ridiculously high, but it's also according to forecast. Yeah. So actually, all is pretty good. It's not exactly what I expected. I expected this to be a little bit higher than what it was. Again, look at the slam up though, right? From 0.5 to 1.25 in terms of up and up and up. Let's quickly see how much the interest rate has increased. So is this adjusted now? I think they've adjusted it right now already. That is wild. That is wild. Yeah. Let's see here, 5 years. Oh, it's not really adjusting. It just says 0. What is the Dutch rate? actually. The interest rate. I think it's below, I thought it was below 0. You see what happens when you only are busy with freaking America? I start, uh-oh, there's a hornet inside. Problem fixing mode. Problem fixing mode. Oh, problem fixing mode, guys. Give me a second. How do hornets get inside? And how do I open this safely? Okay, we got attacked by hornet. It's okay. Still alive. Problem fixed. Whew. Problem fixed. Okay, a little back injury. Oh, we're good. I really, that's one of the things I despise the most about having windows in places, you know? How did I get inside? The window's not open. I understand this. The window is not open is the crazy part. Oh. How? I think they get through some tiny... am I living in a cottage? Is there like just a hole in the wall somewhere? This guy's like, just, well, what happened? I guess you have air vents and stuff, right? But damn, what happened there? This caught me off guard. Oh, we good though, guys. We got, got a little attack, but it's fine. We beat him. It's good. What happened? Yeah. Okay. That was interesting. Peculiar. All right, so next decision that are coming up, there's actually a couple of ones that are rather big. Over in about an hour, actually, as of this point, only 50 minutes, we have a Jerome Powell speech. I'm not sure if I'm going to have time to actually live stream this. Usually, I think that's quite important because it just gets pretty volatile whenever he speaks, period. I don't really have to say much else. Whenever he speaks, things just go wild in every single space, specifically crypto. The market, you see what I'm saying right now? The reason you can't properly trade decisions like this, specifically with a result like this, is because the initial dump, I'm going to say I expected personally for the prices to dump, right? Just because of the decision, and I thought it was going to be bad. However, the decision turned out to be regular, like okay, even though it's a ridiculously high number where it's already, everybody got thinking like, what exactly should we do right here? So that's where the price most likely dumped and instantly recovered significantly because, well, the decision was not that bad. Right now, prices came down, though, most likely because people are still thinking like it's 1.25%. It's not a normal number or something like that. But this volatility in this little midst, let's see if I can open up a, wait a minute. Oh, I have to get used to not being on a Mac anymore. No, it is Shift. There we go. Oh, okay. Let's see. There's a 0.6% volatility within a minute. Somebody said check your USD. Yeah. That's interesting. That's some significant volatility right there. Huh? You can see though the minute up front, the minute leading up to it as well, there was a lot of volatility. A lot of people were already starting to kind of speculate that it was going to be negative, but it turned out to be rather positive. So the next minute is shot up. Yeah, interesting how this goes. Interesting how this is going. For Bitcoin, things are still moving down, huh? Which is my initial expectation. But honestly, after looking at what the price was doing here, I kind of got caught off guard. I was like, damn, okay, it's not as bad as people expected then, huh? Interesting. Once more, okay, so let's quickly cover a couple of things. For anybody watching right now, what do you got to watch out for next? Should I have a position open at this time? I don't think so. Unless you know what you're doing, which generally speaking is kind of near impossible. We have a couple of different speeches right now, mostly from the ECB. This is right now regarding the interest rate. They're going to explain exactly why they think this is smart, why they think it's a good idea, yada, yada, yada. This will be going on, speeches around this, yada, yada, for the next about 40 minutes. Afterwards, we'll start to kind of move over. Again, it's just different people from the ECB, right? This is the official ECB press conference. This is a specific Fernandez Bolo speech. Different things are discussed to different degrees. You can watch these if you want. Most likely not going to make too much of an effect on the price, though. In the ECB press conference, sometimes things are discussed about more policy going forward. Same thing goes for these two. In ECB macroeconomic projections, obviously, macroeconomic projections are rather important for price as this is kind of explaining what their plans are next, which is actually kind of what Fed Powell's speech is also usually about. This is not his quote-unquote day. We talked about it before, right? We have September 13th for the U.S. inflation rate numbers to come out, and we have ourselves the FOMC meeting, the most important day for the U.S. interest rate numbers coming up in about 13 days from now. Those are important for U.S. numbers. These are just kind of preparations. They're explaining to you what is our next policy idea, what do we think of doing, what do we think is important, yada, yada, yada. And that's, again, coming out in about 50 minutes from now. And, again, these two might change the price, might not. It's like a maybe. ECB, Christine Lagarde, Christine Lagarde. Sometimes she said a couple of crazy things which moved the market a lot, but usually I think most rests on Fed Powell. Even now, can we say that the price really went crazy? No, not really, honestly. It's volatile, sure, but 0.6% is a lot for a couple of minutes, but not a lot for such a major decision, specifically because these interest rate numbers are actually ridiculously high. I think over on Euro USD, though, like you already said, it can be seen a lot more significantly that the volatility is wild because on this pair, moving such a huge amount is a lot more than over in Bitcoin. Then again, I don't still think that her decisions are as significant as with the Fed, but that's just my opinion, though. Red says, whenever dollar is weak, everything against USD goes up. BCE, because doing 1.20, BCE, you mean central bank? BCE, doing 1.25% proves, or maybe you mean ECB, whatever. Doing 1.25% proves that euro will be strongest than USD. So it's going up next few minutes unless Powell comes with something low. Because, okay, they're doing 1.25% proves that euro will be stronger. I'm not exactly sure how that's supposed to be the case. Let's see. Let's quickly see what the news is saying. Yeah, so even in the Fed funds rate part, they're saying the next most important decisions are going to be discussed most likely today. Tomorrow we have a Fed Evans speech and then a Fed George speech. I guess these can also have a couple of cool highlights. Remember the last one that we had? What was that? A couple of days ago at the... What was that speech called? Let me see. Fed Chair speech. Hey, look at this. We also have a couple other things. Speech by Vice Chair Brainerd to bring inflation down. September 7th, yesterday. Vice Chair Leo Brainerd, bringing inflation down over the past year, yada, yada, yada. Which speech was that? Point being, this can have a couple of, this can have some influence. Let's just conclude it like that. Let's also go back to indices. Let's see how the markets are doing, generally. S&P, whoa, actually, when I looked at this number just like a couple of hours ago, I think like an hour ago or so, this was actually rather negative. It's gone up. What's the time? Whatever time we live in. I forget sometimes which time zone we're in. Give me a second. Wall Street Pro predicts when the S&P 500 will rally. Screw that. I often laugh at this stuff. I swear to God, if... let's wait. Give it a second. They already have some news on this out there now. European Central Bank raises rates by 75 basis points to tackle soaring inflation. It's gone all the way towards 1.25. European Central Bank Thursday announced a 75 basis point interest rate rise, taking its benchmark deposit rate to 0.75. This major step front loads the transition from the prevailing highly accommodative level of policy rates towards levels that will ensure the timely return of inflation to the ECB's 2% medium-term target, it said in the statement. It added, it expects to raise interest rates further, which is not so good, depending on how you see it, right? Increasing the interest rate, as I said before, it has a couple of different consequences. One of those being that the cost of capital in literal sense has become higher, meaning there will be less innovation. We talked before about how the, I'm not sure if in English is the best way to describe it. Let's say propensity to consume, is that the best way to, let's just say people stall their money out, right? So instead of spending everything now, they're more likely to save over longer periods of time. If there's less spending and there's less innovation in that time, there's less production, and things just kind of go on a downward spiral. Eventually, wages come back down. Eventually, a lot of people get sacked, which means more wages go down and less people start spending, and a little negative spiral. For that reason, interest rates at lower levels is better because you get more innovation, you get more literal GDP growth is what they want, or you want to go at full potential, basically. Then again, we talked about this before. This is a very nice incentive, right, to increase the interest rate or to decrease. I sometimes get scared by this, but it's just the screensaver going on. To decrease it as an economic stimulus, for example. However, as we all have seen, it was at 0 or below 0 in a couple of different places for a long time. And the reason that going below 0 and working on it doesn't, let's not discuss that today. Let's just say that only works until you're at 0. Below 0, it doesn't work anymore. So that's why Europe had a little bit of a different situation with the US for the last couple of years. And now they're basically returning from that as well. But it's, I guess, easier the lower that you are, because you have a little bit more room to grow without, causing crazy amount of havoc. Then again, the inflation is still massive. Have you guys seen it? Have you guys just take a look at this? Just for fun's sake, right? We could pick anything, but I was discussing this with a friend, I think, when was this now? 2 days ago or so. One of my friends that has a very big platform. So I'm just going to translate it quickly. In August, the average gas price was 95 cents per square cubic meter of gas. In 2022, the gas price increased significantly. At the moment, the gas price is actually almost 4. It's €3.94. You can read the number, obviously, per. Damn, why is this so difficult for me to say? Cubic meter. This includes the tax and whatnot and the VAT. But it's crazy if you start thinking about how much that increased. Look at this. So just a couple years ago, this was 66 cents. Right now, it's €4 for gas. If you just can imagine that and just kind of look further at how much prices have increased over this time, this little bitty increase of interest rate, it's really not that much if you start to think about it. It's 0.75. It's quite low if you take a look, right? Going from 0.5 to 1.25, it's a big change, big number for EU, but it's really not that crazy too much quite yet. Bro, what name is that anonymous mouse? Oh, what's up? I'm late. What's up, guys? Hey, guys, where you all watching from right now? What's up, everybody? Let's all see, actually, as well. Do you guys think we're going to pump or dump from here on forward? Also, I'm going to quickly discuss this for anybody that's wondering. What are the next most important decisions coming up in the next couple of days? I think the next, let's say, 2 weeks are going to be extremely important. There's a couple of very big things happening. In theory, a lot of these things happen every single month, but let's just quickly go over them. So once more, today we have the speech from the Fed and the ECB. Those are going to be interesting to watch. Then a little bit later, not today, but obviously slightly later, we have a couple more speeches by the Fed over the next couple of days, specifically just tomorrow. You can watch that if you want. Sometimes things change because of that. Most of the time, not so much, though. So it's not something too crazy to watch out for. Then again, we do have ourselves the inflation in the US September 13th. We have ourselves, after that, the Ethereum merge over on the 15th. We then have ourselves the Fed interest rate decision over on the 21st, 22nd. And then we also, that specific day, have the Cardano Vaso hard fork. Is there anything that we've missed? Let's see. Is there anything in this list that's interesting? I guess core CPI could be interesting. Yeah, I guess core CPI, which I guess is similar to inflation. But that's literally, okay, that's the 13. I was like, there's another core CPI, but that's obviously just the inflation numbers coming out. No, I don't really trade any of this stuff. I should actually, guys, I actually have a whole, did you guys already know? I have a whole new team of analysts. You guys probably know about this, right? I told you guys before. But one of these guys is a big Forex expert. I actually should have brought him on. And I'll do that one of these days. Just bring him on and let him explain what he thinks about this stuff. So we can hopefully get some juicy information out of that as well. Because this is all in the past already. Okay. So there's a couple incentives, but this is all for this week. Is there anything for next week in this? How do we get there? US economic calendar. No, I'm not so sure how to move over to next week. Oh, okay. No, this is all August. No, okay, too bad. We can't see next week over on this one, unfortunately. Can't help you guys with that one. But you already know what's coming up then next, right? We've discussed it just now. The Birds will beat Detroit. We'll see the results after that. Welcome to the stream, everybody. Welcome, Hunter Nunn. What's up? Bearish for Bitcoin, bullish for ETH and altcoins. Bearish for Bitcoin. Who else is bearish on Bitcoin but bullish on altcoins? Somebody says it just bought $10 of Luna Classic. That's the Luna Classic debacle, huh? Man, do I think that's a funny story. The whole Luna Classic. Skedaddle, skedoodle. Luna. Yeah! It's up 50% again, guys. This is funny. Hey, why did we not get 500 likes? I told you guys, if we get 500 likes, I'm going to buy 5,000 or 20. I don't remember. I think $5,000 worth of this. I'm still down significantly. And how much is USD? The good one is USDC or whatever. What's the name again? USD. What was the USTC? It's now. Okay, there we go. Whoop, whoop. We're up 20%. We're only down 95% of our investment. Ha! Juicy. Very, very nice, guys. Very, very, very nice. Just join. What's the increase? 0.75 over on Europe. America is not yet. It's not today. We only have a Fed speech today. So these are the numbers for Europe. This is America. This is Europe right there. What's your early feeling for the US CPI numbers next week? I actually don't know. We'll see as we get closer towards it, but I don't know if the market really reacts to it too much, like days or so prior. So I think it's worth it to look it up in terms of what the analysts say about a day or two before. And then you'll notice exactly, because they'll start to kind of say like, okay, the inflation rate has been extremely underestablished or something like that. The inflation is actually way higher than they're making it out to be, or they're lying in the numbers, or they have to go for a really significant rate. And you'll start to see the predictions as well. And at that point, we can make some sort of educated guess. Right now, for me, it's like just as of this point, Same thing goes for interest rate as well in the U.S. It's kind of like a game of just. How can you really tell? They can do whatever they want. And in this case here, the forecast was exactly perfect. But we've had it as well within this little session over the last couple of months that it was very, very far off from the forecast. Then again, looking at it here, the forecast has been extremely spot on. So I guess maybe we'll just have to stick to these as they come closer. The bottom is near. Interesting. You know what I have with this bottom? It's like, bottom. It doesn't really matter too much to me anymore. I'll just keep on buying. I've gone and changed my mind up a little bit. At first, I was really thinking about, damn, what if I'm missing this bottom? Should I keep buying like mad? Should I wait a little bit and buy the further bottom? You know what? Changed it up. It's impossible to call out the bottom, but once Bitcoin is back at, let's say, 75,000, 95,000, who knows? $155,000. If you bought at 19.2, 18.4, 17.6, it's honestly not that big a difference anymore. In terms of percentages, sure, you might actually say like, yeah, I mean, if you bought at $3 or $6, that's double your money. It's true. It's true. It's very much true. If you bought at $3 versus $12, that's 4 times additional your money. It's true what you're saying. Then again, everybody looking back at that is thinking, well, you bought extremely early. The exact numbers of your money will change a little bit, sure. But the notion, the idea, and the wealth, mostly, it will just be quote-unquote fine, I think. So that's why I don't worry too much about it anymore. I just buy whenever I think right now is a little good decision. For example, right now, $19,000 per Bitcoin. I think that's fine. With Ethereum, I'm being a little bit more conservative as we have the merge coming up. And it still could be a little bit of a decision of, it could still be pretty volatile around that and have a significant dump just before or just after. So I'm being a little bit more cautious with that, even though you guys can't see it perfectly. Maybe like this a little bit better. So right now it's 1625, for example. It could go either way. I'm a little bit more afraid of Ethereum as of this point than Bitcoin, even though for longer term, I don't think it matters at all, if I'm being honest with you. If you're buying right now, tomorrow, 3 weeks, it's going to be fine for the next couple of years, let's say. Then again, that also makes your life just a lot easier. Because then you don't have to be so focused on trying to buy the bottom or trying to... It depends. If you're trading it for the merge, it's a different story. But if you're just trying to hold or buy for a longer time, then it does not matter too much, in my opinion. Okay, let's do another questionnaire, I guess, here. Who's into Luna Classic or the whole Luna ecosystem? Who's like yes or no? Just say yes or no, or good or bad, something like that. What's your favorite 20 ISO coin? XRP most likely. It's my biggest hold. And a lot of people come up to me and say that's really dumb. Well, I just keep saying to people, risk to reward, right? Where's my notepad? Give me a second, guys. Let's go for the full screen. I've also been searching up a lot of phones again to start back another business. A little fun. You guys, never mind. Let's pick up a notepad here. Did I save the last one? I do not believe so. No problem. We actually get back. I'll just get to, don't worry about it, guys. I got you. All right, I got you. All right, there we go. Let's delete this. There we go. There we go. And there we go. Okay, perfect. So, there was this interesting article that we covered earlier, right? Former ARK Invest analyst reveals biggest mistake to make during the bear market. And what they basically discuss is that a lot of people are of this idea that crypto is too risky. You know, there's a good chance you're going to blow all your money. And he basically philosophizes or theorizes. There's a 50% chance, for example, that you'll lose half your money within a year. Fair assessment, I think, right? I think you guys will agree. There's also, however, a 50% chance that you'll actually 10x your money over the next 3 to 5 years. Obviously, these do not have the same time frame, so they cannot be compared like literally here. Because 50-50, if they're not the same time frame, then what are we talking about, right? But let's just say, for example, we take a 5-year approach on all of these, both of these. Let's just say, let's just put it like this. There's a 50% chance that you'll 10x your money in less than 5 years. This is, again, not financial advice. These are just some thoughts. There's a 50% chance that you lose half or even all your money. Let's do all, right? Of 100% nuke in less than 5 years. Just to make it kind of like extremely heavy. What the probability? Okay, I guess what your expected value then is half probability, half the chance to lose everything. So let's just say that you end up with nothing. That's the same. So we'll just put half the chance to get out with nothing, right? That's fine. Then there's also half the chance to 10x your money. If we're starting at 1, what happens then? Well, our expected value is if we put 1 into the system, you're ending up with 5. And I previously put it like this. You can also see this example as a roulette, where usually it's about, let's just say let's do it real. For the sake of easiness, we'll do 49. And we'll do another 49 if you can. Which is why it's such a good idea to go for crypto, in my personal opinion. Plus then, say plus another point. It's the opposite way around, but it's going to be okay. It's not going to be perfect, but it's okay. I am messing up a little bit. There's another 0. It doesn't matter too much anyway. This is going to be like 0.02. All right. So this is like, okay, you have 40. I did it the other way around now because I'm dumb in the brain, but it's okay. You have a 49% chance to basically get, okay, let's type it below. Red, black, red, green. 49% chance to hit black, meaning you lose your money, right? Okay, there's a 49% chance that we hit red and we double our money, and there's a 2% chance that we hit green and lose our money as well. What this ends up being is only 2 times 0.49 being 98. Let's say 0.98 if I'm correct. Meaning that if you put 1 into this machine and you do it, let's say, an infinite amount of times, you'll eventually end up with 0.98, or basically you'll lose money. This is something you, generally speaking, would not take because your expected value is below what you started with. If, however, the odds were in your favor just a little bit more, and for example, it'd go to, okay, you have a 60% chance of hitting red and 40% chance of hitting black, you'd always take this because your expected value is more than 1. You're on average going to get more out of it than you put in. And the same thing kind of goes for crypto, but then on a heavier scale, right? If you have half the chance to lose your money, half the chance to 10x it, it is worth it to put money in because the chance is just pretty good that you come out of this with a positive value. Even though in theory you just have a 50-50 chance of making it, 50-50 chance of losing it. But with the amount of X that is behind it, it's worth it. Let's just put it differently here. Let's just say that you were to put $1 into a lottery machine. but you had a 50% chance of making, I don't know, a freaking bazillion dollars and a 50% of losing everything. Would you take this? Obviously, yes, because the expected value then is, let's say, whatever. Yeah, I'm not sure how many zeros this is. You kind of got to decrease it, and then you'll see that most of the time it just depends on what number is behind here for you to take it or not. And with crypto, this number is relatively high, which is why I basically go to everybody and think, yeah, you know what? Even with Luna Classic, there's a pretty good chance that it will do some sort of pump. So it's honestly not too stupid to buy. And with the lawsuit specifically for Ripple, which is why people often ask me, why do you invest a lot? Why do you invest so much money? Let's say there's a 95%, okay, we'll put the real probabilities here that I personally have, right? Let's say there's a 95% chance that they'll win. Meaning I will, for example, I should put this keyboard to the side. Let's say 10x my money. And there's also a chance that I'll lose everything, which we don't even have to chart. At the end of the day, that's a 9.5x that I'm basically getting as my expected value. Because the rest doesn't matter, right? Even if I put plus whatever number, 0.05 times 0. Doesn't matter because it's 0 anyway. But you guys get the idea. So this bet I'd always take. Whatever. Yeah. It's just something that I wanted people to keep in the back of their head. A lot of people, they do this equation in their head without writing it down. You can write it down for yourself if you want to. Then again, it doesn't make a lot of sense if you don't really have the probabilities too clear. And in this case here, we don't know what the actual probability is of Ripple winning, and we also don't know what the result is going to be after they win. But we're just kind of keeping it simple and saying, okay, easy 10x if they win, which has a, let's say, 95% chance of occurring. You can lower this if you want. It won't change too much. Even if you go towards 50% chance of them winning, I still think a 10x is pretty reasonable, and that would still end us up with a 5x, meaning I'd still take this endeavor. It is only if the probability of winning is like 5% that I start to kind of doubt, because at the end of the day, at that point, your return is a 0.5, right? So you'd want to have at least a 10% chance of 10xing for it to be 1, for you to be like, okay, yes or no, it doesn't matter anymore. Anything above that, anything above a 10% chance, with the 10x in this case being set, is worth it in my opinion. Do you guys agree with this, or you guys disagree? I'm not going to say that this always works, but very often it does. And this is usually how I assess the situation. That does not mean that XRP has to be your biggest holding, by the way. I mean, a lot of cryptos have this same sort of ideology behind it, I guess. So I don't think... No, you need XRP as number one. I'm just saying this is my thought process for going for XRP. And Philly Deveg says, when Ripple wins, I think it will be higher than a 10x. I'm just putting 10x as like an easy number. And also it depends on your time frame, you know. You can also scout it out for the next 5 years, but then... I think that's a different calculation you have to do, because this is just for failing the lawsuit. Okay, 5% chance, and then 95% chance, let's say, of winning. Then we get to this conclusion. What happens in like the short time after that? I have about 7 assets and are spread out equally. I think that's honestly a really smart choice, to just diversify into different things. Don't stick with one. Even though some people are definitely not of the same opinion, I think it's the best. Because you don't know which crypto is going to get that main adoption eventually, right? You just don't know. You might think you do, but I don't think you do. I have so many articles as well about some juicy news. Like, for example, this one got 93,000 views. No middle class left. Millions will be wiped out. 2 market crash predictions, gas cartels, and whales moving Mt. Gox coins. Newsweek in review. Market strategists expect stock market to drop 50% from here, says there's going to be no middle class left. Following Jerome Powell's hawkish commentary at the annual Jackson Hole Economic Symposium, major stock indices, crypto and precious metals slid significantly in value. Over $240 billion was erased from the market, and the crypto fear and greed index continues to slide lower, edging towards extreme fear. It's in there. Furthermore, the chief strategist at Bubba Trading Todd Bubba Horowitz, explains that Federal Reserve raising rates during a recession will wreak havoc on what's left of America's middle class. Then we have Robert Kiyosaki, says real estate stocks, gold, silver, Bitcoin markets are crashing, millions will be wiped out. Report claims Russia and, plans to establish a global, let's not talk about that one too much because YouTube doesn't like that. And Whale spends 10,000 Bitcoin worth 200 million. Bitcoin stemmed from the infamous 2011 Mt. Gox hack. Okay, I've actually seen a couple of articles in that nature. A 2013 dormant Bitcoin wallet just moved 5,000 Bitcoin to Kraken. Also this, a whale sent to over 200,000 Bitcoin to exchanges is a Michael Saylor. And apparently this now is connected to the Mt. Gox hack, I guess, huh? Should MicroStrategy dump its Bitcoin holdings, it could create a ripple effect. But they don't talk about Mt. Gox in this article. Interesting. BTC going up a bit. Yeah, when is our next decision? Let's see. It's about 30 minutes away or 20 minutes away. So our Fed Powell speech is only 20 minutes away. I'm thinking, should we go and sit here and actually cover it? Or just let it over to Faith? Because I'm thinking the moment the speech starts, it's going to take a long time. And I don't want to sit here just covering the speech whole day. Unless something interesting happens. But usually I cover that in a video coming out like an hour later. You guys know what I mean? If we're going to watch the speech, I'm going to have to think about copyright. I'm not so sure which place is going to stream it. And then the moment that they do, I have to think about the copyright. And then we'll also have to like fetch something out of that. And we cannot pause it or anything. We just listen to it. Isn't it better if we just wait till the speech comes out and then we cover it in another video later? I personally think that's better. Philly Devig says he usually goes right on. I'm not sure exactly what you mean with that. You mean that he starts pretty stipped on time? I believe so. Oh. What's happening here? My screen. Not so sure why it's lagging so much. Let me put it to corner. Let me try to. Yeah. Ooh, I'll just do it like this. Ooh. Now you can still see it. Hey, I see a bottle. Put on the floor. Why is it so? Okay, that was not good. Did I break something? No. Why is screen black? I'm trying to make this work, by the way. Give me just a second. Why is my screen black? You know, this is why I freaking hate MacBooks, honestly. Come on, MacBook. Figure yourself out. Let's go. Yeah, I'm not sure this is going to work again. Come on! Big-ass, goof-ass thing. Fuck. Yeah, it's not turning on. Why? You know what? Let's think about this. How do I get this thing to turn on? It's off. Yeah, what do I do? I'm no mechanic, as you guys have most likely noticed by now, right? Oh, it's empty. What? It's in a charger. It just says it's empty. It's trying to bait me. I understand. Okay. You want some extra juice? No problem. No problem, Mecky. I got you. He just wants some extra juice. He's not empty. This liar. He's lying to you, I swear. It's been in the charge the whole time. You know, it's not. You want some extra charge? No, don't worry about it. I got you. Here, I'm going to plug you in, big boy. Give him some extra charge. Slam it, this guy. Yeah, sure. You go slam your MacBook and give me a video, right? Let's do that. All right, everybody? Crypto Obsessed is going to give us a little video where he slams his MacBook Pro. Let's see. But I'm giving my bad boy a little bit of extra charge. He deserves it. He's been working for a little while. He's actually been working like garbage. But I really do appreciate the tech, you know? I guess. Because it is pretty nice, the MacBook. Not going to lie to you. It's just, this guy, I'm not so sure what's wrong with him. He's an odd one out. But those got to be appreciated too. So I guess no problem. Sub brother supporting all the way from South Africa, holding strong with XRP. Let's say you have 20,000 XP. Would that be enough? Fair question. Depends on what you want to go for. If your goal is to have 20,000 XRP, then obviously it's enough. No, you don't have to thank me for that answer. But honestly, it also depends on a couple of other things, like what's your price prediction. I often ask this question to other people just to kind of see where they stand on where XRP is going to go and what their own goals are. But for me, for example, 20,000 XRP would not be enough for nearly anything. Unless I would think, okay, XRP is going really to some crazy prices. But maybe some people are happy, for example, with having, let's say, $40,000 to their name. $1 million to their name. Maybe that makes you very happy. If that's the case, then maybe so, yeah. For example, where would XP need to go to get to $1 million? Well, obviously, you can calculate for yourself. You need $50 a piece, which is a lot, but it's surely, in my opinion, doable at some point. Then again, it's also the same, I think personally, same question as saying, is, for example, 1 Bitcoin enough? Well, there's 21 million Bitcoin in existence. It's only going to get lower. Yeah, there could be a time at some point, let's say 25 years in the future, where really every Bitcoin is worth $60 million. Who knows, right? For example. I honestly do believe Bitcoin will go to $1 million eventually. And for that reason, one, theoretically speaking, is enough. And it's $20,000. It's a lot more than with XRP, certainly. But I do think it will eventually be, good. So then, is it enough? Well, that depends on your goals, my friend. Maybe some people in South Africa are like, no, I want $75,000. That's absolutely everything that I want. I don't need any extra dollar ever. Maybe some person in America is like, I need 75 million. What are we talking about here? You know what I mean? Don't just stream the speech of Lagarde. Let's see if we can find it, actually. Let's see if we can find a live stream of this. Because that's the second point, huh? If you know that it's on, go find a video. Yeah, that's another part of it. Where can we find this? Let's think. Can we just find it here, maybe? In the schedule? Where's the schedule at? No, this is for the Fed. Where is this at? I've lost it. Okay, let me see what I can do. Calendar. There we go. Okay, then we scroll down. Interest rate decision. We have ECB's Fernandez Bolo speech. Who really cares about this one, to be honest with you? The Christine Lagarde one is interesting, but that's not going yet. But I don't see any button to view it either. I'm not sure where you view it, to be honest. I just usually go to Google and normally we find something eventually. Let me quickly see something else. Let's see if I can find this. Can I find this? Why do I... Guys, I'm trying to look at... somebody says nope. I have no idea, my friends. Maybe I should look onto Twitter. You guys are freaking sleuths. If you found it, send it to me over on Twitter. And let me see if I can find it. Fed. Let's just skip that ECB meeting. Who gives a crap about that? Let's focus on the other meeting coming up. Jerome Powell's meeting is starting in 13 minutes. Let's see. By the way, I'm looking it up on the side, if you're wondering, by the way. You can't see it. This is just the same thing. I'm trying to find anything. If you guys have found the speech somewhere or a video of it, send it to me over on Twitter. Of the ECB speech. Okay, a couple of people are asking, what's the news, what's the rundown? Welcome, everybody, because we've indeed already been streaming for 45 minutes. Give you guys a quick run on what we discussed earlier. There was the economic calendar, and we cover this once every so often when I don't forget about it. What went down today is a couple of very important things. You might think, oh, the balances of trade, nobody gives a crap about that. The only most important one was the ECB interest rate decision, which turned out to be an increase of 0.75, going all the way towards 1.25% over in Europe. This is a very big decision, and we saw, well, things go pretty volatile after that decision was made. That was made right around here, this candle right there. So you can surely say that it was a little bit of a crazy time. It was this candle that was the decision maker. And you can see what a volatility has come afterwards over on Euro USD. And even over on Bitcoin, a lot of volatility at that moment and afterwards. Things have still been moving down from the point at which things started. So we then went on to discuss quickly what next decisions are coming up. For example, the interest rate over in the US, the inflation over in the US, the merge and the Vaso hard fork. We then talked a little bit about gas and things changing like significantly. And now we're looking for two specific things. One is potentially a ECB press conference, one of these. There's a lot of them happening over the next couple of hours, and I'm not going to focus too much on them because I don't think too much crazy is going to be said in these. We're looking mostly for the speech regarding Jerome Powell starting in 10 minutes from now, as that one usually has quite a juicy effect on the market. So I want to see exactly what he's going to say. Then again, guys, if you're enjoying these streams, make sure you press that like button. It's greatly appreciated, and I can go back home to my family and make them proud. And, whenever I don't get, whenever I don't get enough likes, I don't get to go home that night. So that's why. So, yeah. What's your thoughts on Luna being green lately? It's literally like, it might do good, it might do bad. You just have to see for yourself. It's not a guarantee, at least. Sean says, my like button is in pieces. I smashed it so hard. Thank you. You can be easy on it. Don't worry. But thank you. Does anybody have that? Does anybody have the link? Where is it going to show up? By the way, a little fun fact. For anybody watching right now that's thinking like stuff like this, don't worry about it. But if you insult me, I mean, I've seen this crap on your account. This I usually just block because I'm like, don't insult me when I'm giving away money. I don't appreciate that. However, if you're just critical and asking, hey, can you show me the winners? No problem. I just, for the sake of argument, pinned it to the profile here, some previous ones. You can just text them if you want, reach out. Some of them are in the chat box here. I think Hunter Unknown is even in the chat right now. Not so sure. I think I saw him just now. He's even in the chat box. It's an example. But we'll just announce the winner. So I don't really understand exactly where people are coming from with this. But from my side, it's not a big problem because I understand criticism. I understand being critical to a giveaway. It's a lot of money. People can't believe it. People can't fathom. On the other side, you got to understand as well. It's freaking annoying. If you're actually doing something good, people are like, this guy's a scam. It's like, what are you talking about, boy? So a little side note. Just ask a normal question, sure. Or do you research? Ask the people, whatever you want to do. But insult me, get blocked, you don't get to win. I just literally remove all your entries. Most people that are critical have entered. Fun fact. But you don't get to win then. So, little side note. All right. Philly says he tweeted it to me. Let's see if we got the link then. It's going to be a little bit difficult to find, by the way, because we get a lot of... okay. ECB governing press council. Is that the one? Let's see. There we go. 14,000 people watching. Prepare for sound? Oh, there's no sound. Okay, good. Is it... You know what I'm actually... Hey. Let's see here. Can we go for this? Can you guys see this? Okay, let's see. If I press it on, give me a sec.
Repeated in that monetary policy statement, since our last July meeting, we are data dependent and operate meeting by meeting. This is the methodology that we adopt. So we were presented by staff with their projection. We had the inflation numbers and the growth outlook, of course. So in the face of these extremely high numbers, the last reading was 9.1 for a monthly reading. But if you look at the last 10 readings, they were the last 10 highest readings in turn. We had a good analysis of the decomposition of the sources of inflation, a good analysis of where the inflation actually lies and what products are particularly affected. And while we conclude, of course, that energy is still the major source of inflation, it's 38.3% compared with a year ago, slightly moving down in these August numbers. But it is still a dominant factor, as is the increase in food. But we also have an inflation that spreads across the whole range of products, in particular in the service sector, where supply factors are less prevalent and where
A little important question. Do you guys want me to go back like 50 minutes to see our whole speech? Or is just skip the rest and just go from here? I'll just continue.
demand plays a role. So we have a range of the product and services that are actually north of 4%. So in the face of an inflation that is extremely high, that is of a magnitude and persistence across sectors of that nature, obviously determined action had to be taken. And this is very much in line with our determination to actually normalize monetary policy as we started back in December. So for those who consistently repeat that the European Central Bank is lagging behind, I contend that we are on a journey that started back in December, where we decided to put an end to the asset purchases under PEP and under APP, to move out of negative interest rates as we did back in July, and now to continue on our normalization path with a front-loading exercise that we conducted today, because we believe that the deviation from target is such that it warrants this front-loading. And we also decided that this was not an isolated decision, but that we would raise interest rates further. We didn't say that we would raise interest rates at 75% as if 75 was the norm. It is not. We will determine, meeting by meeting, on the basis of data, how we reach to that level of interest which will actually return us to the 2% target in the medium term. It is not there at the moment. Our forecast at the end of December, which is not the medium term, but it's the end of our projection exercise, is at 2.3. We are not there. So we have more journey to cover going forward.
Ooh. So that means things are going to get even worse from here, huh? That's literally what she says, right? We're going to, between now and December, go to 2.3. Even that is actually pretty strange. How are they going to get there? Piece by piece. I mean, you'd think that would be one step, but if it's projected for December, what? It's kind of strange to me even. It's a little bit low for that.
But we had a very, you were interested in the flavor of the Governing Council. We had a very cordial, effective, deep discussion on all these matters. And that certainly helped us on the basis of the proposals by staff and the recommendation by our chief economist, Philip Lane, to actually go collectively in the direction of this 75 basis points hike. Now, you asked me about how close we are to the rate. Whether you call it a neutral or terminal is obviously different, but I would like to say this. What I know today is that 0 is not the neutral rate, and that where we are is not the neutral rate. We are heading in that direction. It takes a front loading. It will take further hikes in the next several meetings of a magnitude and at a pace that will be determined meeting by meeting and on the basis of the data that we receive. But we are certainly heading there because that's where we believe that we will actually deliver on our 2% medium-term target as indicated in our strategy.
Thank you, President. The next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much for taking my question. I have one on quantitative tightening, because clearly that could be also a way to drain liquidity from the system and help you to tame inflation. Have you discussed it? Is that something you are looking at? And then one question about your economic outlook, because clearly for 2023, you are seeing growth coming back to 0.9%, if I'm right. But this is still quite optimistic compared to other forecasts. So
that's 24.
24, yeah.
1.9.
Okay. Okay, but for next year, why don't you see a recession? Because many economists do see one. Thank you.
Let me start with the second one. So the baseline outlook is 3.1 for 22, 1.9 for 23, and sorry, see, I'm getting confused as well now. So back 3.
You got to give her a little credit. It's actually pretty hard to answer these questions on the spot, you know? You don't have the numbers in front of you. You have to look back in your memory and try to explain exactly a question that you don't know up front with knowledge that you might not exactly have in front of you. Even though this is her job, obviously, partially, it is hard to answer these questions. So I got to give her some slack for that. Cut her some slack.
0.1 for 22, 0.9 for 23, and 1.9 for 24. So that's the baseline that we have in the projection by staff. We also have, and I think you will be receiving those documents as well, we also have a downside scenario that has been produced by staff on the basis of assumptions of risks in particular, some of which have already materialized. And in those numbers, you will see that from memory, growth outlook is at 2.9 for 22, is at minus 0.9 for 23, and at 1.9 again for 24. So while even in our baseline, we foresee some stagnation for the last quarter of 22 and the first quarter of 23, in the baseline, we don't forecast negative growth in 23. In the downside scenario, we do. That downside scenario differs from the current situation in that it includes, in particular, total shutdown of all Russian gas supply.
Control today.
Well, we're almost there. There's still
cost of inflation, can't be exaggerated.
For helping with the
what Paul Volcker did.
Sorry, guys, my dumb ass is muting the microphone. My bad. I wanted to say, is this the real one? Is this the proper one? I think so, right? We have one from Reuters. We have one from Yahoo Finance. So I'm like, she's very important. I appreciate her a lot. Don't get me wrong. But I'm thinking this one is very much more important. So let's go. Why does that... Oh, does it only glitch for me? Did you guys... I think it glitched for everybody. Why does it keep glitching to different screens? Not sure. All right.
It did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the Great Inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. You know, that speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do here.
I think that that's really important because it's clear that we could see political pressure coming to avoid economic costs when there could be claims from political players that inflation is back in its box long before it is. Jim mentioned in his opening remarks that 2 years ago
Should we skip to live? 30 seconds behind.
Average inflation targeting, and I'm bringing this up now because again, just reiterating the point about trying to sleep better at night. By many accounts, this move has created some more uncertainty in the market, as Jim mentioned, and coming at a time when inflation now has increased so markedly, it creates concern that despite your stated resolve, the commitment to price stability has become less strong. Should you consider modifications?
Why we did that, but the changes that we made were sort of a very mainstream part of a literature around makeup strategies. But really the point of our framework changes, the point of all of them was to, and we said this very clearly, was to have inflation expectations well anchored at 2%. That the average inflation targeting idea was meant to support having inflation expectations. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses, and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short-term expectations are higher because of high current inflation, and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
It seems to me there's a chance that there's a real risk that the labor market, that the labor shortages persist. Does that create a risk that takes some of the ability to manage this process out of your hands? To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging world for companies, and it will certainly create upward pressure on wages and that sort of thing. Today, the labor market demand is very strong still in the labor market. We're still printing new payroll job numbers at a high level. Wages are running at elevated levels, and so we think by our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get back into better balance, and that will bring wages back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve. The shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome increase in labor force participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have measures in place to support a strong labor market and high labor force participation, and that goes beyond what we can accomplish with monetary policy.
You've made some contrast to how things are different today. What's different today from the high inflationary period of the late 70s and early 80s? I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing people actually line up at the Fidelity office to see the monetary aggregates released on a weekly basis. And the way the money travels through the economy has changed dramatically since Milton Friedman first said that inflation's always and everywhere a monetary phenomenon. I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but that, when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I graduated from college in
Good question.
1975, which was close to peak monetarism, and there was quite a focus on monetary aggregates, and I recall it just as you do. So to go to this current situation, so as part of our response to the pandemic, we did resort to large asset purchases to address what were pretty severe disruptions in markets, and then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities don't actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way: whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy, and we don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that. So that's where we would be on that.
That actually calls to mind, at Cato, we do have a strong aversion to a fully discretionary fiat money system. And so we do like to socialize and promote alternative frameworks that could policy and a market direction that eliminates some of this discretion. Jim mentioned that a consistent theme over the years of this conference has been, potential monetary rules. And that kind of calls into question whether inflation and prices are really the best targets to use for monetary policy. Some folks have advocated for a rules-based system, such as targeting nominal GDP is something we've heard a lot about in recent years, partly because, as you say, monetary policy is not suited to address, well suited to address supply shocks. Could you share with us some of your thoughts of that type of approach and whether it's something that you would consider?
So more broadly on rules, of course, Taylor rules have become part of the fabric of economic analysis and particularly monetary policy analysis in ways that must be far greater than John Taylor could have hoped when he wrote his original article in 1993. So, but no central bank and the Fed has never explicitly tied our monetary policy decisions to any formula, including Taylor rules. But Taylor rules, nonetheless, are ubiquitous in all of the work that we do. You have to have a way and a model of explaining how monetary policy will react, and some kind of Taylor rule is now very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this is a lot of well-known experts, many of them at your institution, do support nominal income targeting. And I'll just say that we've looked at that. I've looked at that and really come to the view that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
and one thing I would interject is that we have debates internally as well, and I think for us the concept really is more wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again remove discretion.
I think that's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is, and part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's a level of complexity that even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put that, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years later, we may have a very different view. But it is broadly understood, I think, or thought that trend growth has declined considerably rather, over the course of since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, just big chances of policy error, because we just don't know these things with that kind of, we don't know any of the starred variables, so to speak, with that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint, and it's not something that we have chosen to do or that we are currently looking at.
You mentioned a dual mandate. I don't want to ignore the unemployment rate during this conversation. When I said earlier that we obviously have an aversion to a fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So, Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment and price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say that and have for some time, that non-monetary factors are really what drives the level of maximum employment, which clearly changes through the business cycle and over time. But we can and do assess that, and we do it transparency, and Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
You stole my follow-up because you started out saying Congress sets the mandate, and so my follow-up was going to be, well, should the mandate, should they consider changing the mandate? And I think you've answered that. But I guess a natural follow-up might be then that if the dual mandate weren't enough, there's been talk of adding more elements to the Fed's objectives, including like racial equity that seem far from the Fed's ability to address. In addition, the Fed's remit has expanded from the banking system to the broader financial system, and its regulatory responsibilities were widely expanded in the wake of the financial crisis. How does continuing expanding the Fed's mandates not undermine focus on that fundamental responsibility of monetary stability, beyond things such as the employment element of the mandate?
So I think our current mandate is appropriate, and I would not want to see it narrowed or broadened for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue. And what we've gotten with that is a precious grant of independence that lets us pursue those goals without direct political control. For monetary policy, that's maximum employment and price stability. And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or of Congress. And if we do that, if we do stray from our core mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well. And I think that's pretty well documented and accepted.
I mentioned a couple of times, our concern about a fully discretionary system. And one of the biggest of those concerns is that in the face of, large economic dislocations, we've been running, what really amount to unprecedented experiments. I would cite the, quadrupling of the Fed's balance sheet in the wake of the 2008 financial crisis, and then, doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Could you shed some light for us on where you hope to take the balance sheet over time, and what's the way that you really try to get there? Do you see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June, once it's up to full speed. Process began in June, and the pace of the balance sheet increases, actually rises this month. the plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large-scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And again, we think that the current system works well and provides a lot of liquidity to the system, which is kind of a net gain.
All right, I thought it might be time to shift gears a little bit away from inflation and monetary policy. I remember the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement a digital currency. And I was kind of horrified at the privacy implications of this prospect and said so in a letter to the editor at that time. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences. But the Fed has stepped into this arena with a discussion paper,
digital currency,
central bank digital currency, and several speeches from Fed governors. Our team has reviewed the more than 2,000 comments that the Fed's central bank digital currency discussion paper received, and we find that about 2/3 of them are concerned or outright opposed to the idea. Commenters raised concerns of financial privacy, financial oppression, and disintermediating the bank system, some of the same concerns that led me to write that letter to the editor 7 years ago. How can these serious concerns about privacy and freedom be reconciled with a digital currency?
Let me start by saying that we haven't made any decisions at all about whether to issue a CBDC, and we continue to evaluate the pros and cons and look at the technical questions and the policy questions, and we expect that evaluation process is going to take some time, appropriately so. Secondly, I'll say that we do not intend to proceed with issuance of a CBDC without clear support from both the executive branch and from Congress, ideally in the form of a specific authorizing law. So we did get, it was very gratifying, 2,000 and some comments. And, I won't tell you that I've read those, but I've read all of them, but I've read some of them and I've read the summaries. And, it's a lot of very thoughtful concerns, including the ones that you raised. And there are things that we're considering very seriously. So we in our own paper, we suggested that a CBDC in our jurisdiction should be privacy protected, intermediated, widely transferable, and identity verified. So on privacy protection, let's start with that. Very, very important. And we all see what's happening with the digital RMB. And the issues with privacy. We would not want a world in which the government sees in real time every money transfer that anyone makes with a CBDC. That would not be something that would be at all attractive in the American
even if it were, he
context.
wouldn't say.
So privacy protection is going to be extremely important, and we're attentive to striking a balance, of course, between law enforcement and privacy protection. But that can be managed in the same way that it's currently managed in the banking system, or in some similar way. In terms of another issue, really is disintermediation, and that really is a question of, if, say, you had an interest-bearing CBDC, it could be attractive. It could compete with deposits, could draw deposits out of the banking system. That could limit credit availability. That's another issue to be managed. I think one of the things that actually that Cato mentioned in your was also the run risk issue, and that is the question of, are you creating an asset that would be very attractive in a panic or severe stress situation, and fostering runs. So look, it's going to be, as I mentioned, it's going to be, we think our role is this. we want to carefully and thoroughly analyze the public policy and technological challenges, public policy trade-offs and technological challenges. That's what we're doing. The idea is that this will lead all of us to a better understanding of those trade-offs and prepare the way for, hopefully, a well-informed decision on whether and when to issue a dollar central bank digital currency. That's what we think our role is, and we think that the Fed is the right institution to do that. We can proceed without, we're a nonpartisan institution, non-political institution that we can do these things, and I hope present conclusions and analysis that will support an intelligent decision when it's time to make that.
Well, this is something we'll definitely be having a lot
Bitcoin
to
back in the
say on
green.
future, as well, particularly from a perspective of of privacy concerns. That's being a watchdog on those issues is a very important role for Cato. I do want to ask about cryptocurrency, but first I should probably, in fairness, reveal that the gentleman who photobombed Janet Yellen 5 years ago by holding up a "Buy Bitcoin" sign behind her during her Humphrey Hawkins testimony earlier this year became my son-in-law. So that's a little bit of a disclaimer I'm going to put out there.
What? What?
But without debating the merits or future of cryptocurrencies generally, or one or another crypto products, I'll say that in the monetary arena, Cato stands for nothing if not a desire to see more interest in monetary policy, to see more people concerned about our discretionary fiat system. And also, we want to see private market innovation and experimentation in developing alternatives. And crypto is just such a great example of this. There's a long history of government and regulation thwarting such innovation and experimentation, which we find really disappointing. So I wonder if you could respond to these kinds of concerns, namely that regulators might ultimately strangle crypto to the extent that it really does develop into a viable alternative system.
So I'll talk about it in two pieces. One is unbacked cryptocurrencies as such, and those have not and don't appear to offer, have not offered and don't appear to offer much in the way of public interest in using them as payments. Let's say it's not a great store of value. What it is a speculative asset. It's not backed by anything.
There could be an argument that that's still during the development phase, and that it's something that we could see emerge. But
yes,
be that as it may.
And I also have close-in family members who offer that perspective vigorously. So, as you suggest. But stablecoins is a different thing, and the question is, are there forms of private money like stablecoins which can play a role in our financial system, which would, and the answer is, of course, that we don't want to stand in the way of appropriate innovation, particularly including, digital innovation. But we think that something like that, which is, purporting to be money, would need to be appropriately regulated. And I hear that wide agreement on that, by the way, from a lot of the stablecoin companies now are seeing that as part of getting to a place where they are a legitimate part of the financial system. So I think you need regulation. If people are going to think something is money, then it needs to actually have the qualities of money. And if it doesn't, then you don't want. I don't think you want to take money and make it into just another consumer product where sometimes it fails and sometimes it's good. You want it to be guaranteed to be good. If the public's going to look at it like it was a dollar, you want to have clarity, transparency. You want to have full reserves of very liquid, high-quality assets, and things like that. That's all. So I think that we need legislation on this. Just it's typical of technological innovations. There isn't a regulatory framework that really gets after payment stablecoins. And so I think that's what's needed. But I wouldn't think of us as being opposed to that kind of innovation. We're more the people who are saying, among others, that we need appropriate regulation.
So if there's proper regulation, he's fine with stablecoins, I guess.
In the details, I mean, while we have these debates, I mean, we would concede, we're living in a world where we will see innovation, and we've basically promoted, a light touch, market-focused approach, because there is a real risk of again, having an impact on the development of these innovations and really thwarting what could be very promising promising and useful innovation.
No, and I agree with that. We don't want to be in that place. We want to be in favor of innovation, but also of appropriate regulation.
Mm-hmm.
In favor of
And
regulation
ultimately,
with
some of
appropriate
the
regulation.
People who end up driving, the regulation might be, as you mentioned, legislation. The end product may not meet the objectives that you and I both say that we want. Another topic, as long as I can remember, successive chairmen have warned of our unsustainable fiscal path. Regrettably, no one in Congress or the White House seems to be listening. I'm, particularly during a period of high inflation, I've been, continually chagrined at, the number of big spending bills that continue to come down the pike and legislation that's passed. Long after I think the crisis of the pandemic has ended. The lessons of the financial crisis and COVID might be that keeping our fiscal house in order is essential as preparation to meet the challenges of unexpected but inevitable, economic dislocations. But the opposite lesson seems to have been learned, that we can keep spending, whatever we wish without worrying about a day of reckoning. And I just, I'm very concerned about the day of reckoning and what risks
the day of
the
reckoning,
economic well-being of future generations. And I just wonder, your thoughts on those concerns and the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in America.
So I do share those concerns, and in fact, I was working on those issues before I joined the Fed. But at the Fed, my position needs to be that fiscal policy really is the responsibility of Congress and the administration. Wouldn't be appropriate for me to comment too much on specific policy proposals or laws. More to the point, with inflation running so far above 2%, this is probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get back to a sustainable path sooner or later. To your point, sooner is better than later. And I guess I'll just leave it at that.
All right, thanks. We're getting close to the end of our time, so I'm thinking about a closing question. I wonder, with everything that we've discussed thus far, what are some of the key lessons that you've learned since you became Fed chair, and what advice might you give to a lot of the young, monetary?
I wonder if these are already pre-discussed, because he has a paper in front of him,
working to develop.
So I guess I would say that both experience and also studying history are great teachers of what can be hard lessons. And I actually mentioned 3 lessons at Jackson Hole 10 days ago, and those were first, that the Fed does have and accept responsibility for price stability. Even now, some are questioning that, but that to us is settled. Secondly, that inflation expectations are really important and need to be carefully monitored, because if they do move up, they can make the job of getting back to price stability so much harder. And third is that, the record is there is a record of failed attempts to get inflation under control, which only raises the ultimate cost to society of getting under control, hence the need to do this job now and keep at it. So those are 3 lessons. I would say more broadly, another really fundamental lesson to me is that the structure of the economy is ever changing and highly complex. And, we see that today around the world. Many nations are experiencing the first high inflation in 40 years, all around the world. Different countries have different composition and backstories, but it's really quite global. And the question really is this going to be a temporary thing that's really related to the pandemic in some way, or is there actually something more structural and persistent happening? For example, if we're moving to a world where we're going to see more frequent, larger, and more persistent supply shocks for whatever reason, that will have critical and difficult implications for the conduct of economic policy and monetary policy in particular. So this is not possible to know right now, but it's certainly a question that looms. I mean, to me, to sum it up, I would just say economics is not physics. There isn't any specific temperature at which the economy boils over. It does boil over from time to time. And when that happens, it often takes many years of analysis, discussion, and debate to reach general agreement on why that has happened. So the point is that we are always making monetary policy under high uncertainty about the structure of the economy and the path ahead. That makes our work challenging. It also makes getting it right very important for the people that we serve, and we do think about that every day. So our understanding of the economy has to evolve. As the economy evolves, as time passes, we do learn more, and I think it's okay to follow the evidence and change one's mind. I think advice to scholars young and old is that people shouldn't be afraid to say that they've changed their view and explain why. I actually find that refreshing when people say, you know, my view has evolved in the face of the evidence. I guess one more word to close for those young researchers you mentioned, and this is a commercial for public service and for the Fed. So the Fed is a very special place where people can combine policy research with policy making. This is a place that has, all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is to serve the public. And it really matters. Our work really matters to the public. I would say there's no higher calling or more satisfying mission. So I hope that young researchers and economists and others will consider public service as part of their career. For me, it's been only a part. But in particular, consider working at the Fed, where you'd be most welcome.
Thanks for that. I mean, I share those sentiments.
Hi, boys.
You
Look
know,
for a
you
new job.
Your work at the Bipartisan Research Center, and you know, I'm at Cato because I care about the future of our country and the future, of course, of liberty and freedom in America, and for the kind of world you know, future generations are going to grow up, and whether they're going to have the same opportunities that we all have had to live in a free country and to pursue, you know, their American dream, and being part of that is a real privilege. I know, you know, at Cato we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We wish that, you know, we think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations.
I often think that's a fun thing to say, mostly because, well, they're making it all like so unknowable. Even if you pay attention, you will not know exactly what's going on in the background, right? So even if you're interested, what will you really know?
Chairman, you know, Cato is not shy about being critical, and we enjoy intellectually jousting with you and your team. But we also recognize that you know, we share common you know, goals and objectives for our country, and it's in the country's best interests by which that jousting and those debates and areas of disagreement, it's within that context that they occur. And so I do thank you for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
Thanks, Peter. The pleasure is mine too.
Thanks so much.
All right. So can we really grab anything too amazing out of this one? I'm gonna say no. I don't think so, honestly. If we're being honest, I think the most interesting thing was already tweeted out a couple of times. The Fed chair said unbacked crypto, because he said two things about crypto, right? Have not really offered much in terms of public interest for payments. And the fact that they're pretty ready to go for, or at least pretty willing to let crypto see some adoption, I guess, if it's properly regulated. I think that's the two conclusions that we can only draw from this. What else? He also told us to come work for the Fed. I'm not even sure if you're allowed to work for the Fed if you're not a U.S. Born person. Is that fine? I'm not so sure how that stuff works. But that was interesting. Yeah, I'm honestly also not sure if it would have been better to watch the Christine Lagarde, ECB Governing Council, yada, yada, yada stuff. Because I think there was also a lot of more interesting stuff discussed afterwards. Or Jerome Powell's one. Not 1,000% sure. Maybe this one stopped like a minute after we were done, though. That's surely possible. Because I'm thinking they shouldn't have too much overlap, right? Oh, it's still going on, actually. Oh, no, there we go. It's actually done. Oh, no, she did actually talk to about a minute earlier. She was actually on a really freaking spree, I guess, of answering all the questions. That was interesting. But yeah, not too much that we get out of it. Mostly words of the stuff that we already did know. Bitcoin indeed did go up ever so slightly, which I can't say was exactly following the expectation. Then again, it did dump after we saw our ECB decision, right? After we saw it, let's say just a couple minutes, 2 minutes before ECB, it actually dropped about 1% in that hour and then went up about roughly 0.6. This is Euro USD. What am I doing? Here we go. Over on Bitcoin, I'm thinking like that's not enough. And Bitcoin, let's say a couple minutes prior, it dropped about, let's say 1.66%, and then slightly afterwards it pumped again by about 1.73%. Right now, then again, is down roughly 0.6 and is up. It's been like a roller coaster over the last couple of hours. It's been really interesting to watch this. Baron says you don't need to be a U.S. citizen and you don't need to know anything about finance. Really? That is interesting. That's really interesting. But yeah. Guys, that was it for this stream, I think. We have covered most of what I wanted to cover. The streams are over. There is going to be another important event a little bit later, just to showcase to you guys where it is. Let me quickly see. I think it is... Let me show it to you guys. It is going to be, I believe, this one at 4:15 p.m. That one is still coming up. You might be interested in watching that. You might, however, also not be. It's happening in about 50 minutes from now. It's just Christine Lagarde answering more questions, I think, and gave in a little bit about her thoughts on the economy. But I'm honestly tired of watching this right now. We've been watching for like 2 hours or so. So I'm going to cut it short. I also have to go and get all you guys' winners out today. We're going to also get that done in a couple of hours, most likely. Worst case tomorrow. But I think today, it should also be a very exciting time for all of you watching this. And if you guys are not subscribed yet, make sure you press that subscribe button and like button, maybe. And I'll see you guys again in another crypto video somewhere later today. So yeah, if you're not subscribed yet, make sure you press the subscribe button. See you guys later in another one. And thank you so much for stopping by and saying hi.